Welcome back to the Eric Krown crypto channel, and a very special day today as I have the pleasure of announcing a package that I've been waiting for a long time, and I know many people as well, and that is Caretaker's glorious, absolutely glorious and ingenious HPDR package. So this is going to include not just the HPDR indicator that you are likely familiar with that was released about a year and a half ago now, but it's also going to include 4 other indicators: the HPDR Bands, the HPDR Cones, the HPDR O or Oscillator, and the HPDR V, which stands for Volatility. Now, this is, in my opinion, well, my very biased opinion here, the best way to be looking at things from a statistically based model, because it is incorporating all of the past historical data relevant to your TradingView account and combining that to come up with what is, well, essentially the ranges as far as returns goes, and then organizes it into a percent function. So with that said, what I'm going to do now is I'm going to go over a few other things, just make sure that I hit everything over here on my notes, which first and foremost, I want to say that if you did get the base HPDR indicator that was released a year and a half ago, of course, you are going to get accounted for whatever you paid off of the full price of this new package. So of course you paid, $500 before, you'll get $500 off. Of course, that is just, normal and natural, and you don't need to pay twice for something that, you already paid for, obviously. Anyways, now I also want to explain why the HPDR. So what makes the HPDR so unique and so valuable? To explain that, you need to understand a few things when it comes to volatility and mean reversion. So one of the base concepts when it comes to understanding mean reversion is that price is actually not mean reverting. So most indicators will be run off of price, and they will kind of imply that, because this happened, that will happen. And ultimately that is actually not correct. Now, in a lot of cases, it's good enough to get the job done, to be fair. If it's working for you, more power to you, and continue doing what you're doing, obviously. But mathematically speaking, when it comes to volatility, price is not mean reverting, returns are. And that is why the HPDR is so powerful, because it runs off of historical returns rather than just, price, compared with, let's say, like a Bollinger Band, for example, which is giving you 2 standard deviations above the mean of price, a 20 simple, typically speaking. The HPDR is going off of historical returns. That is why it is unique, and that is why, in my opinion, it is extremely valuable. And then, of course, it is, in my opinion, also more valuable than many other things, just because it can generate historical ranges based off of, past statistics and probabilities. And that's where the true value is. So I'm going to go into my chart view over here. I want to show off a few things of this. And explain, first what you're actually going to get, as there are several indicators here in the package. There is, of course, that first main base HPDR, which you're probably already familiar with. I'm not going to go over that in this particular video, but I will go over the next evolution of that, which is the HPDR Bands here. So the HPDR Bands was kind of a really smart way that Caretaker designed to take care of some of the problems of the base HPDR. So if you had the base HPDR, you likely know, or you probably know, or hopefully you know, that it was running off of all of the data, all of the historical bars that was relevant to your TradingView account. So people who had a basic TradingView account, or a pro TradingView account, or a premium TradingView account, and now TradingView has like many more tiers, and who knows what the fuck they're trying to do. It did change the results overall. It was still viable in many ways, yes, but we wanted a way to standardize this, and that's when he came up with the HPDR Bands, which essentially makes it so that despite your subscription plan, you're going to get spit out the same results over here. As it's going to be a continuation of that running calculation rather than batch it into prior lots. So as I move through this explanation here, the HPDR Bands, I think, is, you probably intuitively understand it, especially if you use the HPDR just base before, but it gives you that same 50% of historic returns range. Then you got the 80%, then you got the 90%, then you got the 95, the 99, the 99.5, and even the 99.9, and even the 100%, which you'll probably never really see it unless if it's like a very new asset or if you're just in the midst of one of the most mind-blowing moves of all time, because that would literally be what that implies. Anything even above like 95 percentile, not 95%, is pretty severe, and you barely even see that happen that often. So, what is this essentially saying? It's essentially saying that, hey, if we're looking at the 50% of historic returns range, this range right here, let me get in my drawing tool. we can say that 50% of the historic returns would essentially align somewhere within this range, meaning that you can come up with a probabilistic scenario as to what's kind of going on, as to whether this range breaks, as to what happens within this range, and that is usually a really good starting point. Then, of course, you can move out, further and further out. But as you move further and further out, these are going to be less and less likely. Obviously, 80% is going to be a lot less likely than 50%. The further, basically, that is to say that, intuitively, the further you go out here, the more difficult it is for price action to hit those levels on this particular period. So, just be aware of that. Maybe I'm just stating the obvious here, but I do feel like it's my, it's obviously my duty to be maybe a little bit more hand-holdy in this particular demonstration. So we've gone through that now. I'll show you the settings over here just to kind of, just show you what's going on. In many cases, I just leave this default, but yes, you can change the ranges. So let's say instead of going with like these base here, you wanted to employ standard deviation ranges. So you wanted to use like 68.5. You wanted to use 95. Well, 95 is already there, but you could use something a little bit more direct in that capacity. That can be done, of course. So you can arrange it however really you want. But I do find that it's quite valuable even in this base format right here. I haven't really had any need or desire to change it. That is not to say that you might not find value yourself in changing it, but as you can see, kind of just with the visual test here, operates pretty damn well, I would say, in its base format. So in my opinion, if it's not broke, don't try to fix it. So fair enough. Anyways, I will take this off now, and what I'll do on this naked chart is I will show you the next indicator, which is the HPDR cones. So the HPDR cones is essentially a predictive function that spits out what these ranges are going to look like over time based off of current volatility and the current, and the current range that the HPDR is spitting out. That everything runs off of the base HPDR, basically. That's not redundant enough. And you can kind of see that over time, if I zoom out here, you can start to forecast a date and what price would be kind of relevant towards that date. If we were to look at the 50% of historic returns range based off of, the current period, and we wanted to forecast into like December 9th, and today is the 19th of November. So, almost a month out, we could see that, hey, 50% of historic returns range will be between 41,500 on the upside versus about 34,100 on the downside. So that is to say that would be, the more likely of those ranges. Anyways, I think this one is, while it looks actually the coolest, Caretaker himself has actually said that this one's probably the least valuable just because it's the least tangible. But I would actually argue that if you're an options trader, this is very, very valuable for doing things further out in terms of expirations. But if you're not trading options, and I expect that most people probably aren't, it looks cool. It can be like a great thing to bring up, but it might not be as directly relatable. So I put back on the bands here. The other two indicators a part of this package that were not, the base HPDR, because there is 5 total, are the HPDRO and the HPDRV. The HPDRV is a volatility-based indicator, which is similar to the BBWP. It's just instead of using price as its base calculation to generate, volatility, it's using the HPDR calculations and then putting them into a percentile format. So, the same sort of logic applies with this in the sense that, hey, When it comes to volatility, being very, 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 very high, it's like a heartbeat. It is designed mathematically to contract, to come back down. It can't stay too high for too long, or otherwise you literally die. It's going to come down. So all of these spikes here typically correlate with the ends of moves, or the ends of the very violent portions of moves, which typically happens during your blow off tops, or your parabolic downside moves as well. So we can just run through a few of them. Actually, I need to take this off because that is going to make it more difficult. But you can see on this move over here where Bitcoin went from, let me just highlight it, where Bitcoin went from the lows of the bank crisis, I think that began in March 2023, to the highs of this next consolidation range. We saw an explosion of volatility, and that did essentially mark the high for the next, what is this, about a month? A little bit more than a month there. Or, realistically, went through a range for the next, really went through a range for the next 3 to 4 months. So, did quite well within that regard. So again, when just like volatility being very high, it is naturally going to come down, meaning contraction, meaning likely consolidation. When volatility is very, very low, it is essentially suggesting that an explosive move is around the corner, or very likely. So you can see, coming off of the lows that we did see last year after the FTX collapse, well, volatility was very, very low for a long time as Bitcoin baked within this range right here as far as price action goes. And then once volatility expanded, it was just explosive. So that is how you know that, hey, the upcoming move is likely to be very severe. Maybe don't let go of your position if you have a good position very early, because it's likely to continue if you've seen volatility, this low for this long. So that is also, just another way to kind of interpret volatility. But as I said before, the main thing with HPDRV is that it's based off of returns rather than price. So theoretically, it is more accurate. Personally speaking, I'll just say it straight out, the BBWP actually still does a pretty damn good job and is very much serviceable, and it is also free, to be fair. And while it's theoretically not as accurate, I think it's a worthy substitute. It's a worthy substitute, certainly. Anyways, the last part of this indicator package is the HPDRO, or HPDR Oscillator, which represents directional volatility. So this particular piece is very interesting to me, because this, I believe, has potential to really replace a lot of momentum oscillators, because it is going to be, well, it is unique in that regard that it combines, well, the HPDR calculations, which is returns and volatility, combined with, in an oscillator fashion. So it's giving you directional volatility, which is something that we didn't really have before, because volatility is, by definition, direction neutral. This, however, gives you a bias on which direction, things will ultimately go. And as you can see, the zero read right here is kind of like the neutral area. When things go below, okay, volatility, if volatility starts to rise, then we expect that, well, downside price action will emerge, and vice versa for when it is above the zero read. So when it's rising up there, especially when the moving average is rising, I should say, and volatility is also rising, okay, the explosive moves theoretically should be to the upside. So this particular one, I do think is really, really cool. It is still, new to me, actually. So I am finding all sorts of new ways to be using it myself within strategies, within, just within general analysis. And I think that things will just kind of evolve over the next few years as we get more and more familiar with these tools, because again, this is relatively new. But ultimately, I found a lot of value in this one, especially when you match it up with the HPDRV. These things are meant to be used together. They are best used together, and when you can, correctly identify where these sort of major pivots are, it can give you a bit of an earlier edge in deciding where that volatility is likely to expand towards. Meaning, what direction is it likely to expand towards? Okay, that is it as far as all of the indicators go there. And I think that's a good place for me to be leaving off on this particular video. It's already getting long enough, I suspect, but that just kind of represents my excitement here as we finally get to release this one. It's been a long time coming, and Caretaker spent a very long time making it. I think that it solves a lot of the issues with the prior HPDR and adds a lot of value on top of that. And well, if you're a more statistically based trader, this is something that at this point I will not, I basically don't trade without it. Most of my strategies are based around this particular indicator now as the sort of, the operator is what I like to say. And then I add things on top of it to, come up with sort of, some sort of an edge, some sort of a profit-taking model. And well, this is where I believe trading will kind of lead for the next, for the foreseeable future. So with that said, I'm going to be signing off. I want to wish you the best as always. Take care, much love, and see you hopefully soon.